All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Friday, everybody. Today is December 27th, 2024. I hope you all had a very Merry Christmas to you and your families. And we are back now. We are wrapping up the year, and it is a quiet day in the news. And I'm doing my little air quotes when I say quiet because we're supposed to end the year without a lot of big developments. Everybody's just kind of in that in-between Christmas and New Year's. Not a lot of business gets done. Yeah, the Santa Claus rally stocks usually go up a little bit this time of year. Maybe sometimes some year-end profit taking causes a little bit of but you know what? What's really going on this morning is geopolitical chaos all over the world. It's beneath this soft headline kind of day, there is a freaking mess going on in the world. And I guess that's a very 2020s thing to do. Let's just talk about some of the headlines I found this morning as Mish and I were going through. First of all, Finland, and I totally missed this one over the last couple of days. Mish caught this. There was another case of undersea cables getting cut in the North Sea up in Europe. A Russian tanker, part of its shadow fleet, which has been smuggling oil around the world illegally against sanctions, all that stuff. They've been dragging their anchors. This is the new thing. Ships dragging anchors in the Baltic Sea and in the North Sea and cutting cables. This time it was a member of the Russian shadow fleet. They cut a power cable that connected to Finland. They also cut 2 data cables. This was on Wednesday. On Thursday, Finnish naval forces boarded the ship and seized control of it. This is just a month after several cables that connected Denmark to the rest of Europe. They were cut by a Chinese ship dragging anchors. Guys, this sabotage of undersea cable networks seems to be like a regular thing. And now ships are getting seized. How long until a shot gets fired over this? And wars have been started over less. So this story is worth keeping an eye on. Every time one of these power cables, one of these data cables gets cut, traffic through the remaining cables gets more expensive. It's just sabotage. It just doesn't, it just slows everything down. It makes everything more expensive. So our leaders are hard at work making the world a worse place for us. And then on Wednesday, also happening on Wednesday, we had a commercial airliner got shot down by the Russians again. This time it was an Azerbaijani Airlines flight, was flying to Grozny, Russia, and they were trying to land at the same time a Ukrainian drone attack was taking place on that city. And I guess Russian air defenses mistook this airliner for a Ukrainian drone. I don't know how you do that, but they hit it with what appears to be a surface-to-air missile. The plane diverted. They tried to cross the Caspian Sea and land in Kazakhstan, and they crashed on landing, killing 38 out of the 62 people on board. There was about 28, 29 survivors in the tail section of that plane. But you can see in the wreckage of the plane, the plane was just peppered with little BB-like holes, which is indicative of a hit by a surface-to-air missile. So you've got that going on in the world today. Also, all Azerbaijani flights to Russia, save for a few to Moscow, have now been canceled. You've got South Korea has impeached their second president in 2 weeks. So they're on quite a roll over in South Korea. This is the fallout from that declaration of martial law last month. Looks like the interim president had delayed confirming several judges that had been appointed by parliament. Those judges were expected to finalize the impeachment of the former president and basically completely remove him from power. Well, the interim president decided he was going to delay the appointment of those judges and confirming them. And Parliament said, oh, hell no, you're out of here too, buddy. So they voted immediately to kick him out of power. So now South Korea is on their way to having their third president in 3 weeks. Again, they're on a roll over there. The South Korean won is taking a dive this morning on this news at its lowest level since 2009. For that currency, the strong dollar continues to wreak havoc across the world. We got stronger dollars. We got higher rates. Somebody forgot to tell interest rates that they're supposed to be going down, that we've got a Fed that's been cutting since September. Yeah, that's not really working. And speaking of a stronger dollar, the Indian rupee just hit its lowest level ever against the U.S. dollar. A big drop in the value of the rupee, and it's being driven by month-end dollar demand by importers. India imports almost all of its oil, a lot of its food. And what do you need to import those things? You need dollars. And at the end of the month, you got to pay for all this stuff. And there's a dollar shortage in India, causing people to dump rupees to buy dollars at any cost. Where are my BRICS guys? I was told many times for many years that any day now, BRICS was going to supplant the US dollar as the dominant currency. And well, India is the I in BRICS. So just throwing that out there. And right now, it doesn't seem like they're anywhere near replacing the dollar because from what I can tell, India remains as desperately in need of dollars as all of the other BRICS countries, and their currency is continuing to fall against the dollars. Got that going on in a geopolitical mess. Now, more domestically here, let's talk about the U.S. Yesterday, we got jobless data here in the States. Initial jobless claims were 219,000. That's down 1,000 from 220,000 the prior week. That wasn't so bad. That was actually pretty good, the initial jobless claims. You'd expect those to be low, though, because there's not a lot of layoffs happening in December. Nobody likes to fire people right before Christmas. But continuing jobless claims, that was a big one yesterday. Continuing jobless claims, 1,910,000 or 1.91 million. That's up 50,000 from last week. A big jump in continuing jobless claims. That is the highest in 3 years. So even though people aren't losing their jobs at an alarming speed, once they do lose their job, they can't find a new one. And that $50,000 or 50,000 person bump right there, that's going to be enough to put unemployment up to 4.3% in the next jobs report. You guys may recall in the last jobs report, we were at like 4.249, like just below where we would round up to 4.3%. So that big jump in continuing claims will be enough to put us over the edge. The unemployment rate is going to keep climbing, guys. As Jerome Powell mentioned, he does not want to see any further unwelcoming softening in the labor market because in Powell's own words, the labor market is now softer than it was in 2019 before the vid. And to round that out, we have got a 30-year mortgage rate that rose again this week, up 13 basis points to 6.85%. That is the highest level since June. Once again, guys, I was told interest rates are going down. Doesn't look like that's really happening. Interest rates continuing to rise, up big since the Fed began cutting. Remember, guys, the Fed only controls that short-term interest rate. They only control the overnight rate and, by extension, the 1 month and the short end of the yield curve. The longer end of the yield curve, the more long-duration debt, like 30-year mortgages, like the 10-year Treasury, those are more influenced by inflation expectations. And when you've got inflation that is already well above the Fed's arbitrary 2% target and they're cutting rates into that, people start to think inflation might be coming back and they start demanding higher interest rates for long-term loans. That's why I think the Fed is making big mistakes here with this cutting cycle. Why don't we shrink my big melon of a head and let's see what's going on in the market today, shall we? And guys, don't forget that like button for the YouTube algorithm. And if you're new here, hit that subscribe button right next to it and come have your coffee with the Melon Heads because we do this every morning. And right now, the S&P 500 had a little bit of a quiet day. It's down 0.5% here, 31 points to the downside for the S&P ahead of the open. The Dow is down at 201 points, again, a little less than 0.5% in the red this morning. And the NASDAQ is down 125 points, leading the way lower, down 0.57% ahead of the open. So we got stocks are down across the board. Although we've been talking a lot about strong dollar, the dollar's actually slightly weaker this morning. I think this is being driven mostly by strength in the British pound. Right now, the DXY is at 107.92. That's down 21 basis points, back below 108. But the dollar has been on a tear in recent weeks. Looking over at the bond market, we have got yields are higher on the long end of the curve, and they are down on the short end. The 30-year Treasury, 4.791. That's up almost 3 basis points this morning. The 10-year, 4.594, up almost 2 points. Meanwhile, the 2-year is down 1 basis point to 4.322, and the 1 month is at 4.324. That's actually up almost 2 points. So not a lot of movement going on in the bond market this morning. But guys, let's put this all in perspective. We're looking at the 10-year yield here on TradingView. These are daily candles, and we're going back to about February all the way on the left side here. September 18th is when the Fed made their rate cut. Right down here. That's when the Fed started cutting rates. Now, look at what long-term interest rates have done. Look at how they marched straight up pretty much until November, little bit of a correction, and now we are resuming higher here. Guys, this is inflation expectations on the rise. This is the market saying, I want a higher interest rate in order for locking up my money for longer, especially with what the Fed and what Congress is doing to the value of our money. And I can't help but think when I look at this chart, do you remember all the headlines about a bottom in commercial real estate? Remember all these like Steve Schwartzman and Barry Sternlicht, the CEOs of Blackstone and Starwood? They were all saying, oh, don't worry, the Fed is going to start cutting rates. And that's really going to help commercial real estate because it's going to bring those borrowing costs down. Well, the Fed has been cutting rates for several months now, and borrowing costs have only risen. So I got to wonder, where is that commercial real estate story? I don't think that bottom is in. I don't think that is largely behind us, although I think the commercial real estate industry wants us to believe that. Also, let's look at the commodities board here. We've got gold is lower this morning, $2,617 for spot gold. That's down another $16 or 0.63% lower. Spot silver down again this morning as well, $29.43 for spot silver, down 36 cents or 1.2% lower, but I still like the shiny. Copper is essentially unchanged this morning. Platinum down 1.5%. Palladium is down 0.75%. And February WTI crude futures at $70.36. That is up about 77 cents or 1.1% higher this morning. Looking over at Bitcoin, we've got Bitcoin is pretty much unchanged here. $96,000 is priced on Coinbase. We're still kind of in this mid-90s range where we've been stalled out for about the last week or so. We broke out from this level for a couple of days in the middle of December where we were back, over 100,000, around 104. I think we went as high as 108 very briefly, but now we're back into the 90s, still consolidating in Bitcoin. Now let's talk about some of these geopolitical stories. What a mess our leaders are making from the world here. Finland stops Russia-linked vessel over damaged undersea power cable in the Baltic Sea. And there you can see a Finnish Coast Guard cutter alongside a member of the Russian Shadow Fleet, one of those tankers that's been moving oil around. Finnish authorities detained a ship linked to neighboring Russia as they investigate whether it damaged a Baltic Sea power cable and several data cables, police said, in the latest incident involving disruption of key infrastructure in the region. Finnish police and border guards boarded the vessel, the Eagle S, early Thursday and took over the command bridge. Helsinki Police Chief Jari Liku told the news conference the vessel was being held in Finnish territorial waters. The Eagle S is flagged in the Cook Islands, but was described by Finnish customs officials and the European Union's Executive Commission as part of Russia's Shadow Fleet of fuel tankers. Those are aging vessels with obscure ownership acquired to evade Western sanctions amid the war in Ukraine and operating without Western regulated insurance. Russia's use of the vessels has raised environmental concerns about accidents given their age and uncertain insurance coverage. The Eastlink 2 power cable, which brings electricity from Finland to Estonia across the Baltic Sea, went down on Wednesday. The incident follows damage to 2 data cables and the Nord Stream gas pipelines, both of which have been termed sabotage. So more undersea cables getting cut here. Again, our leaders make the world worse. We end up paying the price for it. Data gets more expensive, slower internet speeds, more expensive power, and a partridge in a pear tree. And also going on, we've got Azeri, or I think that stands for Azerbaijani airline, pauses over half of their flights to Russia after a crash. Flights to 7 cities were suspended amid reports that a jet was downed, and safety of Russian airspace is in question after the deadly crash. Azerbaijan Airlines suspended more than half of its Russian schedule over safety concerns after a plane headed to Grozny this week was reportedly damaged by Russian air defense systems before crashing as it attempted to land in Kazakhstan. The carrier said Friday it's suspending services to 5 additional Russian destinations after earlier pausing flights to Grozny and, oh man, are you going to make me pronounce this? Makhachkala? I don't know. Maybe you guys let me know. How's my non-regional diction doing this morning? All right. After pausing flights to Grozny and Makhachkala, the flagship Azeri airline will continue flying to 6 Russian cities, including Moscow and St. Petersburg. The Embraer SA-190 aircraft left Baku, the capital of Azerbaijan, on Wednesday, carrying 62 passengers and 5 crew members. It was nearing Grozny when it was forced to divert across the Caspian Sea. Ultimately, the plane crashed about 3 kilometers from its destination in Aktau, Kazakhstan, killing 38 of those on board. Now, I don't know if you can see it in this picture or not, but there are other images floating around of the wreckage of this plane. You can't really see it too well, but if you look at some of these pictures, there's higher quality images. The left side of the plane is peppered with holes, look like they were made by BBs. That is indicative of a strike from a surface-to-air missile, which explodes ahead of an aircraft and fills the air with shrapnel, kind of like birdshot. And there was also video that passengers were posting from their phones within the plane that were showing holes all over the side of the plane and in the overhead compartments. It's pretty clear this thing was hit by a missile, unfortunately, and a lot of people lost their lives. Not the first time a commercial airliner has been shot down by Russian air defenses in recent years. And the South Koreans are getting involved this morning. South Korea impeaches 2 leaders in 2 weeks as crisis deepens. We got another impeachment going on. South Korea's parliament impeached acting President Han Duck-soo, dealing another blow to a government already reeling after President Yoon Suk-yeol's suspension less than 2 weeks ago for his brief martial law decree. Lawmakers voted 192-0 in favor of Prime Minister Han's impeachment on Friday, according to the National Assembly Speaker Woo Won-shik. How's my pronunciation, guys? He said before the vote that a simple majority in the 300-seat parliament was needed for the motion to pass instead of the 2/3 required to suspend a president. Now, the main opposition Democratic Party, which holds 170 seats, filed the motion to impeach Han on Thursday after he resisted pressure to immediately appoint 3 judges to the Constitutional Court, which would boost the likelihood of a ruling to finalize Yoon's removal from power. So it looks like this guy who was brought in on a temporary basis after Yoon Suk-yeol was kicked out of office for basically leading a coup in South Korea. This guy was supposed to appoint 3 judges, and those judges were going to finalize his removal. He delayed that, and South Korean parliament is not screwing around here. The second they heard about that delay, they just immediately removed this guy from power. So now it looks like the country's finance minister is going to take over as president. He'll be the 3rd president in 3 weeks, and I'm sure he's just going to do wonderful things over there in Seoul. Look at what the South Korean won is doing here. 1,472 won to the dollar. This is USD KRW. As you see this chart moving higher, that means it takes more won to make $1, i.e. the weakening of the won here quite substantially since a few weeks ago when they had that martial law decree, which was basically a coup, guy. The Korean currency has just continued to weaken here. So the dollar continues to strengthen. Other currencies continue to weaken. And then India is getting in on this one as well. The Indian rupee posts steepest single-day loss since February of 2023. This one just hit the tape this morning. The Indian rupee fell the most in almost 2 years as month's-end dollar demand by importers weighed on the currency. The rupee dropped 0.6% to a fresh record low of 85.7437 per dollar on Friday, marking its largest single-day loss since February of 2023. Concern over the nation's trade deficit and slower economic growth have exerted pressure on the rupee, along with the dollar's global strength. The rupee, which is among the least volatile currencies in the world, has been setting new record lows this month as the dollar's resurgence weighed on emerging market currencies. Traders are watching the new central bank governor's approach to foreign exchange market interventions, which may allow for more volatility in the currency. And take a look at this chart of the Indian rupee. It looks a lot like that chart of the Korean won. USD INR, the number of Indian rupees it takes to make $1, at 85.39 this morning. We were as high at one point as 85.81. It's come down off its highs. Got a big wick on that candle here. But you can see, guys, the rupee has been weakening all year pretty much constantly. And again, this is a pretty big member of the BRICS bloc, right? This is the most populous country in the world. This is one of the world's biggest economies. It's one of the world's fastest growing economies. And yet they are struggling from a dollar shortage this morning. We hear so much about the world de-dollarizing. I hear a lot about it, but I don't see a lot of it happening. I see a world that is as dependent on the dollar now as they've ever been. And just ask somebody who's running through a dollar shortage how they feel about the BRICS currency replacing the dollar anytime soon. It really doesn't look like that's going to happen. And we're not going to spend too much time on this one, but China's industrial profits extend decline to a 4th straight month, dropping 7.3% in November. The The one thing I would take away from this one, guys, China's stimulus, it still is not taking effect here. Big decline in their industrial profits. Now, we are seeing that decline slow. The drop in profits was less than declines in previous months. They had slumped 10% year on year in October, and that followed a 27.1% plunge in September. All right, so this 7.3% drop that just happened last month, it's continuing to fall. So things are falling, but they are falling slower at least. And then we've got, there is no surprise when it comes to the persistently lower profits faced by the industrial companies, especially in China's disinflationary environment, said Suan Tek-kin, head of research at UOB. However, the worst is over for China's economy, given the slate of stimulus push, she added. I think it's basically just bottomed out, and now it's on its way up, he told CNBC's Street Signs Asia. And guys, much like commercial real estate, seems like every day there is somebody on CNBC calling the bottom in China, calling the bottom in commercial real estate, calling the bottom in whatever. You know, at some point, somebody's got to say, wow, that's like the seventh bottom this week. I'm beginning to think this isn't really a bottom. And again, when they're falling 7.3%, that might be a smaller decline than last month, but it is a decline still, which means no, CNBC, the bottom is not in. That's what negative numbers means. We're still going lower. Now, back on the U.S. side of things, let's talk about some of the jobless claims and the real estate data we got in the last few days. Initial jobless claims in the U.S. eased by 1,000 from the previous week to 219,000 in the second week of December, contrasting with market expectations that they would have risen to 224,000. So initial claims, it was a beat, down from last week, lower than expected. That's good news. It was the lowest reading since the near 7-month low of 213,000 from a month prior, suggesting that U.S. labor market remains tight ahead of the turn of the year, and so far aligning with the FOMC's recent signal that inflation poses a bigger threat to the economy than a softening labor market, and maybe not, warranting restrictive rates. Now, here you can see in the chart, we got a slight decline to 219,000, down from 220, down sharply from 242 at the beginning of the month. Not quite the lows we've seen from recent November. But look at this continuing number. Recurring applications for U.S. unemployment benefits rose to 1,910,000 in the week ending December 14th, the highest in more than 3 years, adding to signs that it is taking longer for out-of-work people to find a job. This is the highest in 3 years, guys. It's up by over 50,000 from a week ago. 1.91 million people on continuing unemployment claims. That should be enough to tick the unemployment rate up to 4.3% at the next jobs reading. It may even be enough to take us up to 4.4%, depending on what happens between now and then. So continued unwelcome softening in the U.S. labor market. That's what Jerome Powell would call that, unwelcome. He does not want to see higher unemployment here. It is high enough in his opinion. Now, we also got higher interest rates. This is interesting. There's the stag and there's deflation. The average rate on a 30-year fixed mortgage surged to 6.85% as of December 26, 2024, rebounding for the second consecutive week to the highest level since early June. The rise aligned with soaring U.S. Treasury yields as markets adjusted expectations for fewer Federal Reserve rate cuts, influenced by hawkish projections, weaker economic data, and inflation concerns. In other words, the stag and the inflation. There it is. Look, guys, here's September. Here's when they started cutting rates down here at the bottom, and here's rates just continuing to rise. The average 30-year mortgage rate, 6.85%, significantly higher than the 6.08% or 6.09% we had before the rate cuts started. So Fed is lowering, but borrowing costs are rising. And while borrowing costs are rising, we're also getting this one from Redfin here. This is dated just this morning. Redfin reports housing supply ends 2024 on the rise, up 12% year over year. So we still hear so much about how housing supply is so tight, and that's why home prices won't fly. You know, the tightest, we need more supply, just build, build, build. But look at the data, guys, up 12% year over year, rising inventory levels. Sooner or later, that's going to result in significant declines in prices. We've already seen some declines in some markets. Some markets are still higher than others here, you know, still moving in the wrong direction. But a big jump, 12% year over year in housing supply. And I want to send a shout out to my buddy Nashville Pasta Man, who tagged me in this one on Twitter just the other day. This is from the Kobayashi letter on Twitter. It says, breaking, only 52% of newly constructed apartments in the second quarter of 2024 were rented within 3 months of completion. That is the second lowest reading since 2020. This is down from the 74% record posted in Q3 of 21, according to Redfin. 1-bedroom and 2-bedroom apartments saw the biggest declines, driven by the spike in new apartment construction. Apartment completions jumped 22.6% year over year to 117,500 in the second quarter, the highest in at least 12 years. Completions are up by a whopping 56.6% over the last 2 years. The U.S. housing market seems to be slowing. So what are we seeing, guys? We're seeing a lot of new construction and not a lot of new apartments are getting built, but not a lot of those apartments are getting leased or getting rented. Half of them are still vacant 3 months after completion. And combine that with this data about housing supply up 12% year over year, and combine that with these 30-year mortgage rates that continue to rise, you just kind of see where we're going here with the situation in the housing market. It's just this slow drip of data getting worse and worse, and yet prices remain stubbornly high. How long can these prices really stay here with all of this data that keeps screaming that we need lower prices in order to move these units, and yet they just won't happen? Are we going to get 3 or 4 years of price declines in like one snap reading? We're just going to see them just take the elevator down? I hope not. That would be chaotic for markets, but it really looks like that's what we're heading towards. And the last one of the day, guys, we got this one. Airbnb woos travelers with new hotel-like luxury benefits, because Airbnb is one of those things that could contribute to a sudden surge of inventory in the housing market. All those real estate bros who bought all those houses thinking they were just going to Airbnb them and turn them into cash flow, well, now they're having to add perks to move those things to get them to cash flow. Airbnb plans to offer travelers a lot more for their vacations than just a place to sleep. Let's see. In 2025, we will all live like royalty at a stranger's flat. Tell me this was a British guy who wrote this without actually telling me. Thanks to Airbnb's new luxury offerings. Think fridge restocking, midweek cleaning, and transportation to and from the airport. Amenities that travelers have come to expect from a hotel stay, but not so much from someone's guest house. These are among the features of a new guest service marketplace that Airbnb has tested for its big push beyond accommodations in 2025, according to interviews with company executives in the past year. Combined with the May relaunch of its travel activities product Experiences, the new business lines will help add $1 billion or more in revenue a year, Airbnb CEO Brian Chesky has said. But why is Airbnb doing this now, 8 years after it first ventured into areas other than lodging products like Experiences? Airbnb and its online travel peers have contended with moderating growth and changes in spending patterns following an initial post-pandemic boom. The company benefited from the removal of COVID lockdowns in the U.S. in 2021 and the ensuing trend of revenge travel from customers with pent-up demand. 3 years later, Americans have settled back into more typical vacation patterns, and inflation has prompted them to become more careful with spending, causing market growth in the U.S. to lag behind Asia and Europe. Guys, there are a lot of broke Airbnb owners out there who are not making enough money to service the debt costs on the mortgages that they took out. Not to mention, a lot of them committed fraud by checking off that this was going to be their primary residence when they bought the place and took out a mortgage on it. It's something my friend Melody Wright has covered a lot on her channel and in her Substack. Sooner or later, these Airbnbs are going to hit the housing market, and it's going to be a big flood of new inventory when that happens. And I just want to say thank you so much to Transspace007. That is a trippy name. Thank you, Mr. Trans, you psychedelic melonhead, you. He says, so why haven't the markets corrected downwards? They pumped them on expectation of lower rates, and now they're not. Such a clown show of a market. Well, Trans, I don't know if you'd noticed, but last week we kind of did. I wouldn't call it a correction. We didn't quite enter that 10% down correction, but the Dow had something like 11 consecutive red days in a row following that FOMC press conference from the Fed. So the markets, they didn't correct down. We didn't enter correction, but there was a move lower. Now, that move lower is still ongoing. We'll see how many legs or how much of staying power this downward correction has right now. But it's important to keep in mind, Trance, that while we have seen a little bit of a move lower, we're still seeing growth in the money supply. There are still more dollars sloshing around in the markets than there was a month ago or there was a year ago. Even though the Fed is engaged in quantitative tightening, the banks and private credit markets and private equity, they're still creating and loaning so much money into existence that we are still seeing inflation. Remember, the definition of an inflation isn't prices rising. The definition of inflation is an expansion of the money supply. We are seeing an expansion of the money supply. And so we're all like surprised. I don't know why prices are still going up. It's because there's more money. That's why. So that's my opinion why markets haven't severely corrected lower, because where does the inflation flow first? It flows into assets first, right? What's that? The Cantillon effect? When new money enters the system, or most of the new wealth creation or the new money creation flows to the people closest to the source of money creation. And the people closest to the money printers are the banks and the stock market. So that money flows into assets first. So we're seeing asset price inflation, consumer inflation follows. And last but not least, you get wage inflation after that. Thank you, Transpace, for supporting the channel. I appreciate that very much. And thank you, Big Mouth Barry, who says, all I wanted for Christmas was for silver to go up, but all Santa gave me was a lump of coal. I think the price of coal did go up, though, Barry. I guess I was naughty. Thanks for all you do, Jack. Well, here's a shout out to all you naughty melon heads who got some inflationary coal in their stockings. Hey, man, just stack those lumps of coal that you got in your stockings, guys. Energy prices probably heading higher because, I mean, hey, the German government is collapsing right now because the Greens want to spend all their money on climate change, and Europe is like, we're broke, we can't afford it. But like Greta demands more windmills and more solar panels. So energy's probably going to keep getting more expensive. That being said, maybe the Saudis decide to flood the markets with oil, maybe not. That, of course, would put quite a dent in that higher energy price narrative. Anyways, Big Mouth Barry, sorry you got that lump of coal, sir, but merry belated Christmas to you, and thank you so much for supporting the channel. And there's my buddy, the Pasta Man, who sent us that Kobayashi tweet about the apartments being vacant. Thanks for that, brother. He says, who's cooing who? Parliament-looking sketch. Well, right now we got Yoon Suk tried to coup, and then they got rid of Yoon Suk, and then the other guy, I forget his name already, he came in and replaced Yoon Suk, but he was from Yoon Suk's own party, and he was dragging his feet on appointing the judges that were going to finalize his removal from power. And then the other party was like, nope, you're out of here too. Now we've got the third president in 3 weeks. He's coming in, and I'm sure he's just going to do wonderful things, and I'm sure the South Korean won is just going to keep depreciating into non-existence. Man, I tell you, the South Korean currency, I mean, look at what that thing has done in the last couple of years. God, how'd you like to have all your money in cash in South Korean banks right now? I mean, these guys are just destroying people's lives with what they do to their currencies. Thanks again, Pasta Man, for supporting the channel, sir. Who's cooing who? Was that an AC/DC song? I don't know. Anyway, thanks again, brother. Steve Woida says, Ari, Airbnb mortgage fraud. Why wouldn't lenders investigate if the owner has multiple properties before lending? Maybe the lenders don't want to know, Steve. Just a thought. I mean, there is a certain ignorance is bliss mentality among lenders during periods of frothy valuations and rampant fraud, right? Kind of like during the housing boom. Remember the scene in Big Short when they were at the gun range? And, you know, they're firing off all this fully automatic stuff, and they're talking about what tools these mortgage lenders are. And he asked the guy a question. He's like, hey, man, why aren't you worried that the rising delinquencies means these loans are going to go bad and your firm's going to lose money? And the guy just says, dude, why are you such a buzzkill? I only brought you here so I could expense the ammo. So, I mean, that's kind of the prevailing mentality in markets. So maybe the reason why they don't investigate is because they know what they're going to find if they investigate. And once they officially know, then they have to take some corrective action. They have to inform law enforcement. So if they just remain blissfully unaware, then they can keep doing it, claiming stupidity. I think that's why they won't investigate. It seems to me, based on my conversations with Melody and some of the data she showed me, that everybody knows this. It is the worst kept secret. It is painfully obvious what's going on, but they just keep doing it. And of course, regulators are just incompetent. So, you know, regulators are more worried about going after people who get $600 in Venmos or people who make a couple of bucks selling knitted beer koozies on Etsy. Oh, we need to know the beneficial interest on your LLC forms. Why go after widespread mortgage fraud when you can target people making a few $100 on eBay? You know, that's why. because our regulators suck and our lenders suck. That's why. That's my optimistic appraisal of the situation this morning, Steve. Thank you so much for supporting the channel, sir. And thank you, everybody, for having your coffee with the Melonheads this morning. Guys, don't forget that like button on the way out and that subscribe button if you're new here. It really helps out the channel. We'll be back on Monday morning to close out the year. Thank you so much, guys, for the super chats, as well as thank you to my magnanimous Melonheads on Patreon and YouTube for everything you guys do for the channel. Appreciate you guys very much. Link down below should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.